Hey guys, this is Ron Avalis. I'm a Forex trader and the founder of Chart Junkies. And what I want to do today is just a quick video lesson on the Cypher pattern. I just want to help you learn to identify it in the market and use that knowledge to leverage your trading when you're out in the markets. If you want the history, the backstory, the origins of the Cypher pattern, all of that's going to be posted on the website, chartjunkiesblog.wordpress.com. But for the sake of time, I'm going to go ahead and just jump right in. So the Cypher pattern works with a set of rules. The very first rule is we want to identify an impulse leg. What is an impulse leg? Well, an impulse leg is an obvious move to the upside or the downside. We don't want a lot of noise. We don't want a lot of bounces off of support and resistance. We just want a very obvious and clear movement in one direction. So for this lesson, we're going to use a bullish movement or a movement to the upside, and we'll go ahead and plot that here. Now the impulse leg is labeled X at the start point and A at the ending point of the impulse leg. So here's our X to A. The next rule is we want a 38.2% retracement of X to A. But we do not want it to touch the 61.8% retracement level. So let's go grab our Fibonacci retracement tool. We'll draw our X to A, and we're going to look for the market to come from A and retrace back to this 38.2% level, but we don't want it to touch the 61.8. If it touches the 61.8, it's an invalid Cypher pattern. So here we've got it plotted. That is our A to B. Now the next rule we're looking for is a 127.2% extension of X to A. But we do not want to touch the 141.4% extension. Oh, sorry about that. So what does that look like? We want a 127.2% extension of X to A, but we don't want it to extend to 141.4%. If it does extend that far, then it's an invalid Cypher pattern. So let's grab our extension tool. We'll go X to A, back down, and we want to move like this. Oh, excuse me. Wrong tool. Here we go. Up into the 127.2 level, but we don't want to touch this level. So anywhere in that zone's okay. And that is our C. Okay. Now where's our final D point? Where do we enter the market? Well, we enter at the 786, the 78.6% retracement. Oh my goodness, my spelling. Of X to C. Another thing to note, we want to enter in the same direction as the impulse leg. That's not going to fit there. Let me stretch it out. So enter in the same direction as the impulse leg. What does that mean? Well, let's finish up this pattern and I'll show you. So we're going to go X to C, and we want to enter at the 786. And that's going to be right here. Let's finish up this pattern. So X to A, 38.2% retracement down. We extend 127.2% up. And then we're going to come back down to the 786 right here to complete this Cypher pattern. And now, like I said, we're going to enter in the same direction as the impulse leg. The impulse was bullish, so we want to enter bullish here. Let's talk stop losses. Stop losses are different for every trader. Backtest and see what works for you. What I do is 10 pips below X. So if here's my X, we're going to put our stop loss 10 pips below it. Targets is a 38.2% retracement of C to D. What does that mean? We go grab our Fibonacci retracement tool, go C to D, and we're shooting for this 38.2 level. This is where we want to get out, right here. Okay? Very simple, guys. So we want X to A, impulse leg. A to B, 38.2% retracement. We do not want to touch the 61.8. B to C, we want a 127.2% extension of X to A. And then we finally complete at the 786 right here. And we want to go bullish. If this was a bearish Cypher pattern, obviously we want to go bearish, right? You just want to flip this around 180 degrees. Okay, now let me show you an actual real life example of this. Let me bring over the daily chart for the euro and the Japanese yen. Now here, at the very end of March, we've identified an impulse leg down. So what are we going to look for? A 38.2% retracement of X to A, but we don't want to touch the 61.8. So let's grab our Fibonacci retracement tool, go X down to the end of the impulse, and you see we touch the 382, but we don't touch the 61.8. So we have a valid X to A, we have a valid A to B. What's the next thing we're looking for? Right, we're looking for that 127.2% extension of X to A. So let's go bring out the extension tool. We'll draw that out. So we'll want to look for price to come down into this 118.30. Let's roll forward. You see right here it does. So that is a valid C point. And now where do we enter the market? Right, the 78.6% retracement of the X to C. So let's go grab our Fibonacci retracement. Let's go X to C. And we want to enter right here at the 122.23 level. We'll plot a line right here. We want to put stop losses 10 pips above. You see it's 123.32. We'll go 123.42. And we're going to enter as soon as it touches this blue line in the same direction of our impulse leg. Bearish, so we'll want to go bearish here. We'll also be shooting for a 38.2% retracement of this whole move from C to D. Here's the 38.2, so we'll be shooting for a target here. All right, let's roll forward. Boom, you see here we're in the trade. Here we've hit our entry point. So now we're looking for price to come back down and get out here, or we're going to be stopped out here. Let's roll forward. You see it nicely rolls over. Let me finish drawing this out here and we'll talk about it. Price nicely rolls over at this D point, hits our profit target, and actually just continues to go down. And that's why it's nice to sometimes have two profit targets. But awesome, guys. If I went a little too fast for you, pause the video, rewind it, write these rules down. It's going to take practice, 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 and you'll just start to see these patterns pop up all over your chart. Awesome. Very last thing I want to add in is do not forget to hop over to our Chart Junkies website. And again, it's chartjunkiesblog.wordpress.com. We post analysis, trade alerts daily, right? And if you subscribe to the mailing list, you'll actually get those trade alerts sent right to your inbox every day. And these have been doing great lately. We're up over 200 pips just this week. So don't miss anything. Just come right over to the website, chartjunkiesblog.wordpress.com. Subscribe, check it out. Come over to our education tab. Free education. Great resource for you guys. Anyways, as usual, happy trading. You guys have an awesome night.